Anybody want to just use the chat box down the bottom? Say hi. Okay, you can hear me. That's good. Okay, we're now recording and we'll get going. Today is a fun one. We're all about scaling today, which is module 5 of the 6 modules, 6 steps. And it's probably the one that we all look forward to, but we all despise because we think it's very hard and it's going to take a lot of toll on us, and we're going to dilute ourselves. And I'm going to show you why you shouldn't be afraid of it, why you should encourage it, and how you can actually get in there and control it a little bit. So for those of you who are new to this, I should start with my name is Daniel O'Connor. I been in this business now 37 years. I commercialize intellectual property. As a business coach, I help inventors to take their business, fund their business, scale their business, and exit their business or their intellectual property project. I've written this book, $1 Billion Napkin, which is really a roadmap for B2B, that's business to business projects. It doesn't handle consumer products. That one's a little bit different. But if you have a consumer product, yes, I can help you in a different way. But what we're going to talk about today is primarily for business to business. So if you've got something that is industrial, commercial, it might be software, it might be something from mining or an automotive or something like that, then yes, we can help you. And I'll give you some examples today. Now, what we're going to teach today is module 5 of 6 modules, and that's normally a full weekend workshop. Each module takes 3 hours, and today I'm only going to spend about 30 minutes, and then we're going to go through Q&A. So we're not going to have too much in terms of content for you, other than normally I give you some examples. I give you the key points, some examples, and then I teach you 3 things. And then at the end of that, we wrap it up with making sure that you've got it by simply answering all the questions that you have. So let's get into this. I want to share my screen with you now. Today, as I mentioned, is module 5. It's all about scaling your project. So if you've now got your business going a little bit, you've created something out of your intellectual property, you've got it funded, and you've got from where you a standing start, basically where you had no sales, through to a point where you now got cash flow, maybe cash flow positive, maybe break even, but you're not really making a screaming profit yet. We have to change that. Otherwise, all you do is just buy yourself a job. So let me show you how we do that. So first, I'll give you some background on the 6 steps. For those of you who are new on this journey, you've just joined me, you're not aware of some of the others, I'm just going to run very quickly through each of the steps so you understand that they are critical and why they're critical. Firstly, 2 points you need to understand. First one is commercialization is a linear process. That is, you start with A to B, B to C, C to D. If you jump from A to D, you've got a big problem. And ultimately, those steps become roadblocks. And those roadblocks then start to drag you back. And ultimately, they could cost you your project, they could cost you your profit of your project, or they could delay. And time is money. So you could end up spending an extra 3 years trying to get this done because you've glossed over one of the steps. So they are critical and you need to address them. But if you understand what those 6 steps are, you plan well in advance, they're no longer roadblocks, they're simply steps, and you are walking through them, maneuvering, navigating your way through because you know exactly what to expect. Okay, so let me just very quickly run through the steps for you. Ideation and modeling is always your first one. You start with the ideation, I then help you with the modeling. The modeling is all about, the ideation is all about your product. Okay, what have we got? How does it work? How much does it cost to make? How much does it cost us? How much do we think we can sell it for? But the modeling is completely different. Modeling is all about the interface you have to a business, industry, or market. Understand this. First point is in the ideation modeling, your money is not in your widget. Even though you think you've got the greatest thing you've ever had or anyone's ever seen, the money is actually in the commercial model you wrap around that widget. And if you understand that, you will make money. That's why most people fail to make money, because they have a great product and they try and rest on that. They don't have a great commercial modeling ready to go that will take their project and accelerate it. Next, ownership and protection. First thing you think of with that is, oh, patents. No, not necessarily, because we try and delay your patenting process. Yes, you'll need patents, particularly if you're going to do licensing, but we try and delay your patenting process simply by using waiver of rights, non-disclosure agreements, commercial confidentiality deeds, all of these sort of things that we line up so we can, anyone who's going to access the product, look at the product, evaluate the product, contribute to the product, has signed all of these so they don't have any ownership in it. And ultimately, when you do lodge your provisional patent, which is usually the day before you accept a check from the cornerstone investor, which is the third step, then you've got 12 months in your provisional patent process in order to get from a standing start to a cash flow positive. Okay, funding, yes, we bring in money, but we don't bring in millions of dollars. What we do is we get you enough money that will get you from where you are, which is in R&D, transition you across to a commercial project, and you're starting to earn money now, and it will get you through to pre-scale, and scale is what we're doing today. So that the money we raise is only enough for transitioning, basically, to get you from an R&D, you transition now, you're a company or a project, and you're going to start earning money on it as you accelerate it, but you're not going to scale it. So you're only going to do, say, maybe $5 million a year. And once you get to $5 million a year, you're then looking at scaling, which we're going to do today. $5 million a year, what we look at with a scaling project is how do we make $5 million a year into $5 million a month? That's really what we're looking at. And that takes a whole different skill set we're going to talk about today. Then we have exit. Now the exit is the best time to plan the exit is before you start a project. The second best time is right now. Wherever you are, if you haven't got a clear exit for you and for the people that came in at funding, you need to stop what you're doing, go back and plan out your exit. So everyone understands what they're involved in, how it's going to work for them, and what they're going to get out of this. And for you also, you're not locked into a project, because otherwise all you did was build yourself a job. Let's go through it. So that just gives you a quick overview. We're going to focus on scaling today. Now, as always, I start with a question. The question today is, do you have what you need right now to make your annual sales every month? That's what a scaling project looks like. How do we make this into a big corporation from what it is now? Some people think, well, all I need is money. Well, that's not the case. You need a whole different skill set, and we're going to go through that with you. So module 5 will teach you just 3 things. It's all I have the time for today. First one, I'm going to show you how scaling a business can exponentially increase the trade sale value. That includes the licensing value as well, because you then can do geographic on demographic licensing and sell multiple licenses rather than just one, because you have a defined value. So in a case like this, scaling your business is going to make sure that when you sell out your business, you're not selling it for $10, you're probably going to get $500, because if it was a $10 business, because now you've got the way they value intellectual property projects is usually net present value of future earnings discounted for risk. And you can now show what your trajectory is on your growth pathway from where you are now and where you were a month ago. And it shows that you've scaled up a little bit, and then where's now selling your next 5 years, and showing what their steep incline is. And that's what they're buying. They're buying that blue sky. Second, I want to show you what resources venture capitalists can bring you, because now you need help. And that help you can't build yourself, and you shouldn't ever try to build it yourself unless you've done this several times and watched VCs do it for you. And finally, I'm going to teach you why you should have a technical advisory panel. This is a little bit sideways, but I think you need to understand what a technical advisory panel will do for you. And at this is the point where you need one, and I'm going to explain to you why you need it. Okay, so that's the 3 things we're going to go through today. Firstly, before I start, I need to give you an idea of why we call a scale-up and not a startup. And that is a geography thing. In the United States, a startup is something that's doing about $5 million a year, and they want to now do $5 million a month or $10 million a month. In order to do that, you're going to start the project up. For us in Australia and many other countries, that's a scale up. The startup is where we're doing absolutely nothing, and we've got a great idea and we're about to start a business. That's a startup to us. I think it's called a kickstart elsewhere, but for us, we're now talking about scale ups, which is where you've got about, I don't know, $1 to $10 million turnover, and you're not really profitable, but you're ready to go, and you've got the capacity to do this. All you need is several different things that a venture capitalist can bring to you. Now, venture capitalists generally don't invest in ideas. They invest in cash flow. So they're looking for you to have cash flow, and they are looking at how they can double, quadruple, 10x that cash flow, because that's all they're interested in. If they can do that, then your project is of value to them. And you'll find it's a lot easier to sell that if you come with their requirements as they open up their doors and say, present to me. If you walk in there and say, I've got a brand new project and I'm not turning anything over, they'll say, come back in 5 years. If you walk in there and say, I've got 5 million turnover and I need to get to 50 million, that's when all the lights go on. They're open for business. Okay, so let's keep going. Why do we need to scale? Okay, if you can't scale a business, all you did was build yourself a job. Basically, that's what you've done. You may have quit your corporate position in a high end or middle end, but it doesn't matter, for a major corporation, and you started your own business with this idea that you built it into something, and now you're earning money. But basically, all you did was transfer the risk to you and your family, and you've got a job. And it's a job you're going to find very hard to get out of if it's not going to grow. So that's a trap for everybody. You're probably better off staying back where you were, enjoying the superannuation, looking for that big pay rise when you can get a promotion, and putting in the years until you retire, if you like, and then starting your business. But if you're serious about this, you need to understand the business has to accelerate. Now, the bigger it gets, the more options you have. So if your business is doing $1 million a year and it's just scraping by and you're making a little bit of money, but not as much as you're making in your job, you've got nothing to sell. But once you get this to $1 million a month and you're clearing, let's say, 300,000-400,000, and it's starting to roll forward, and you know that all you need is another $20 million to grow this to a, you might want to franchise it, you might want to list it, you might want to back it into another joint venture or something like that. Whatever you're going to do, you know that the options are there, and you have got far more options if you've got a high turnover and you've got a high growth. Now, it takes more than money to 10 times a business, 10x they call it. If you heard of the term 10x, that's really make your business 10 times what it is. It takes a lot more than money, and I'm going to show you some of the things it does do. Now, everyone will want to be part of your project once you achieve profit or you show potential. So you don't have to worry about, oh, there's going to be another hard slog of raising capital. No, it's not. It's very easy. If you walk into a venture capitalist and say, I've got 5 million turnover, I need to get to 50 million, and I've got a process to do it, but I need the money. These guys are going to be your best friend. And then it's a matter of what sort of deal you can do. So, and you're picking the right one, because venture capitalists are specialists in certain areas, and you only talk to the ones that are specialists in your area. I'm going to explain that in an example later. Okay, VCs do bring more than money. A lot of people don't understand that. So yes, they have deep pockets, and that, by that I mean, if you walk into a project and you say, I've got 5 million turnover, I need to get to 50 million, I need $10 million to do it. And they look at the plan and say, yep, that's good. Here's $10 million. We're going to take a party on this, and we're going to put in a lot of extra services. But along comes an opportunity for them to turn this company into a $200 million company, but you need another 30 million. They will have it. If they don't have it, they'll have access to it. So you don't have to worry about that. That's their job. So one of the things they bring is money. Next, they bring management experience in high growth projects. Don't underestimate this. Just because you're the best at building your widget or understanding your widget or applying it in the market or the industry doesn't mean to say you're really good at high growth projects or high growth companies and within that industry, and you don't have the networks as well. So understand that they bring far more than just money. They also will create an exit for themselves and for your cornerstone investor that you took on earlier, but more importantly, for themselves, for you as well. So in a case like that, they're going to be building the pathway to that exit. And at that point, you can choose to exit or you can choose to stay on, depending on what you decide. They also have the most important thing that I found that they bring along is their industry relationships. We used to call this the golden Rolodex. I'm showing my age here. Because they have contacts, and usually venture capital firms and private equity funds and large strategic investors are siloed in certain industries. So if you had software, you could go to one company. If you had something in aviation, you go to another one. If you did something in medical, medtech, you go to a third one. So these people specialize in the area, and the reason why they specialize is firstly they have all the know-how with experience in high growth projects, but more importantly, they know how they'll exit it, and they also have contacts with people who they want to use to get an exit, but also to get market share. So I want to show you an example of that, of how VCs can kickstart a project from the absolute outset. Now, this one got going before they'd even pretty much put $1 into it. And this is an Australian project, and I'll just share the story with you if I can. This was nearly 10 years ago now. We had a family of very clever people here in Australia. They had developed an aircraft called an Eagle X-Wing. They had a farming background. They found that farmers, we got big farms in Australia, they found that farmers had a problem with going out to check stock and check water holes and water barrels and everything else by flying low and in a turn to look out and check. And while you're out looking out and checking things, your aircraft can stall or spin. As a result of that, they're losing a lot of farmers because the aircrafts have a potential to spin when they're low and slow. They can't recover. So what these guys did, they developed an aircraft that wouldn't stall, wouldn't spin. It was low and slow, and all it did was get a bit sluggish and bumpy, and then it'll drop in and start flying again. So all you had to do was set your controls to certain revs, and you knew you weren't going to spin. No matter how tight the turn was, the thing wouldn't drop into a spin or a stall out. Now, some people say, oh, that's pretty dangerous. Not for a farmer. It's far less dangerous if he's going to just get lumpy and start flying again as he drops 200 feet instead of 1,000 feet trying to get out of an incipient spin. So as a result of that, they had to get some new technology, which they developed because these guys are very, very clever. This was all fiberglass, and they developed a technology which layered and bonded metals with different types of glass, such as Mylar, Kevlar, etc. And they were able to do this with a cold bonding process, which basically means they don't have to stick it in an oven and heat it up. So that was a big bonus for them because they had long wings. But more important than that, they realized that they could do away with heating ovens, so the parts that they're making could be much larger. They sold that company to the Malaysian government, actually, who bought it for the technology, but they didn't sell them the bonding technology. They kept that, and they moved it, and they formed a company to commercialize that because they had an opportunity for a contract with Bentley. And they were talking about aviation industry, so they wanted to look at that. So in order to scale that business, because they got it going, they went to a venture capital firm, and the venture capital firm they went with was one that was from the aviation industry. They looked at it, made some, kicked their tires as they normally would, did their due diligence. They went to, in this case, it was Boeing, and they basically did a deal under the Australian US offsets program, because we're buying a lot of aircraft for Qantas and other airlines. And as a result, we had to offset some of the trade by making some of the parts in Australia. So Boeing had an offset obligation, and they couldn't fill it because what does Australia make for that Boeing can use? Very little. So these guys developed a way of cold bonding elevators and rudders and ailerons and fairly large pieces of equipment that were not necessarily steel, but could be bonded to be stronger than steel. So, and because of the size of them, they couldn't fit into an oven, not without tens of millions of dollars worth of investment to get an oven that size. And they decided, here's what we do, take it to bits. Take it apart. Boeing tested it. It was done in the Institute of Technology in Australia, where they flexed it up and down for hundreds of thousands of cycles, basically did it for 10 years worth of work, and then said, okay, it's still together. We still can't destroy it. So then they set it up to destruction, couldn't destroy it. I said, we want this. The venture capitalists pretty much lined up the deal, signed the deal immediately after they invested in the project. So they got into the project, they got the project into Boeing, and then they did an IPO within 12 months, and it's a public listed company in Australia now. So they did that all without committing themselves. They went out there and they knew that they could do it because that was the area of specialty, and they were able to capture that business, build them to tens of millions, or it was hundreds of millions of dollars of turnover with just one contract, and a long-term contract under an offsets program, which they knew would run for at least 50 years. And then what they could do from there is start building their asset. They had an exit, which is the IPO. The family had an exit option, and they took that, and they're now into other things, and they're doing some very clever work in other areas now. So that gives you an idea of how a venture capitalist can work for you if you do this right, and how they're working for themselves, but they can do okay by you as well. So if I now just jump onto the next one, which is how to build a technical advisory panel for you. Now, I recommend that you have a technical advisory panel, and there's a very good reason for it. And I'm going to show you some examples of why that is such a good idea. Now, firstly, just to give you a quick overview of what they do, there's no legal responsibility for members of a technical advisory panel or the company. There's no liability, no responsibility or duty for you to take their ideas and encapsulate them. This is just suggestions all along the way. It is a very loose operation. Everyone signed waiver of rights, non-disclosure, etc. But the whole idea here is, because we don't call it a technical advisory board, we're able to say, as a panel, you have no liability. Please come on board. You don't even have to have directors and officers insurance, because these people are volunteers. So it's a great little system to get to plug into the industry or the market, which is very important at an early stage. So what you're doing is engaging with the industry and the market. Really, you're engaging with prospective buyers. I'm going to show you how that works. It can also be used to reward collaborators. So if you've got people in the industry and you say, I want you to come on board and I want you to contribute to my project, but I'm going to give you some equity in this project. So later on, if you turn me into a customer, you're actually benefiting yourself, because you're getting your shares in both companies. And then what we do is we do this as a prorated equity over 18 months. So just a quick explanation of that. You might have 10 people on a technical advisory panel. I wouldn't recommend any more than 4 or 5, actually, but still, if you had 10 and they each got 18 options over 18 months in the project, which are exercisable at the list price or a nominated price at the beginning, no matter how much they climbed up or money was raised at a higher level. You, at that point there, if they turn up for 18 meetings and contribute for 18 meetings, and the contribution is evaluated by the other members of the technical advisory panel, not outside parties. So you get to vote on your peers to say they contributed, therefore they should be entitled to all the shares for the meetings that they showed up for. And let's say they only showed up for 12 meetings out of 18, then they actively contributed for all 12, they would get 12 shares out of 18 shares. 18 options, they get 12 options. So that's basically how it works. You don't just get given this because you signed up for it. You have to actually earn it, and you get judged by your peers. Your ideas might not be the best ideas. You might be the most argumentative member of that panel. That's not a bad thing, and you get rewarded for that. So there are many panels that just each of them get together and give each other everything, but they can't give you options if you didn't show up for a meeting. So that's basically how we reward them. So there's no cost to you. It's usually done on options over an 18-month period, and at the end of 18 months you already have your exit, so they can convert those options if they want. And we're not talking 18 options, we're talking probably 18 million options or whatever it's going to be. Now, the inventor usually chairs that meeting. That's their new role, because the whole idea is once you've received Cornerstone Investment Capital, the role of the inventor now changes to head of R&D, and they also need to chair the technical advisory panel. That's usually a very good idea. Sometimes it's an absolutely disastrous idea because they do not want to sit down with their competitors, and that becomes a problem. And they also overrule putting anything into the project later on. But having them in there with the dual role of head of R&D and head of technical advisory panel means they're more likely to adopt the ideas and put them into the project itself. Okay, so let me show you how the HITECH Act in the USA was able, we used that, how a technical advisory panel that we set up was able to trade sale software project to a Fortune 500 company in the US. This was quite an interesting one. The process was software based. These guys had a data compression software, and they used mathematical vectoring, so they could do 3D modeling and they could actually rotate it around. Now, I'll just quit that for a second so I can talk to you more clearly. And so the whole idea here was they would have this software, and their idea was someone sitting in, let's say, Johns Hopkins could be talking to someone in Mali who was doing a heart operation on a patient and done a 3D scan, and the scan was uploaded, and both parties or several parties were online watching the 3D modeling, and they were able to turn the model in real time, invert it, flip it, do everything they needed to do so they could see, oh yes, you need to stent over here, you need to secure that ventricle a little bit more because it looks like that could be a weak point, and they set it all up so everything was able to be advised for the surgeon who may have been his first time doing stenting a patient while they're awake or something like this. So whatever it is, it meant that teaching could be brought in and they could see 3D modeling of the whole thing, so they didn't have to be there peering over the surgeon's shoulder, but they could be contributing. So these guys thought, we're onto a big thing here, let's go and put this to the market. They did, and it went horribly wrong because teaching universities don't spend money, and they don't want to change what they've got because that represents risk. So they decided, most of them decided, we won't do it. Those who wanted to do it wanted to do it for free and said, if you do it with us for free, every surgeon that uses this is going to go out to the market, and in 10 years' time, they're going to be big enough that they will want to use this software. And these guys said, well, we're not sitting around for 10 years, so thank you, but no thanks. So they went back to the drawing board, and we actually remodeled the software. We didn't touch the product. We did touch the commercial model that it had, what wraps around that product. And we decided, we came across this thing in the US called the HITECH Act. So HITECH Act basically said that by 2020, all small medical, dental, and other practices, everything from radiology to, in our case, it was dental, would have to digitize their records or they couldn't sell their business after 2020. So that meant a problem for a dentist, let's say, a dental surgeon who's been in business for 35 years. He's got warehouses full of storage container or filing cabinets, all with records in them, usually x-rays and things like that, but nothing was digitized. So the law said, if you want to sell that practice, everything, all your patient records, barring those who have deceased, need to be digitized. So this software could actually digitize very quickly, and they knew that, so they thought, why don't we just focus on that? So they took the software, they re-engineered a little bit of it so it could marry up to high-speed scanners, and at the other end they had this process. They searched around and found a data reserve called a NAS box. A NAS box allows you, I think it's about 12 terabytes of hard drive access, high-speed hard drive access, and it's basically a storage drive. And these little boxes could be put anywhere, and you could replicate them, one in your practice, one in your accountant's office, one somewhere else. It didn't matter. But essentially, you could do this, and you could do it online. And once you'd gone back and got all your records lined up, then you could start again and start, as you got records, you digitize them and put them into this NAS box, and everything would be perfect. So the venture capitalists who scaled this got a company called Burkhart Dental out of Arizona. And Burkhart Dental had, I think they had about 180,000 dental practices on their books. They supplied everything from surgical equipment to toilet paper. Anything a dental practice wanted, they'd pick up the phone, they'd make one call, and the warehouse from Burkhart Dental would ship anything they did, and usually did it on credit. These guys locked in their dentists simply by giving them 30 days and 60 days. And so they were able to really lock in the industry. They were only number 2, and they had about 170,000 dental practices. Gives you an idea of how big this industry is. So because they're number two, we went after them, and that we brought in a VC firm that was specialist in the area, and they then said, technical advisory panel, let's set it up. When they did, they bought Seagate, the manufacturer of NAS boxes. They said, we want Seagate on the technical advisory panel. So we went to Seagate. Seagate recommended their regional manager for Southwestern, which was the guy who ran 6 states in southwest of US, including Arizona. He came on the technical advisory panel. He was a technical guy in Seagate, so he knew his stuff, which is good because sometimes they've got sales background and that's not really what we want. We got him in there. Within 6 months, this guy realized something. He realized that they were selling a lot of NAS boxes, but they had a long-term relationship, a regular relationship with all of their clients that were using NAS boxes as a result of this. Whereas what Seagate normally did was sell hard drives to people who made PCs and laptops, and then from there they had a relationship with, let's say, government procurement people, but that relationship was based mostly on repairs and replacements for things that went wrong. So they didn't have a positive relationship with the industry or the market, and they wanted to change that. By buying into the NAS boxes, they realized they would have a long-term relationship with that industry, which they could extend to other industries. So Seagate, who'd never done this before, put their hand up and said, we need to buy this. Now that was a gentle nudging by ourselves and also the venture capital firm. And ultimately they acquired it. And the way they did it was they put all the software from this project that we had, put it onto an EEPROM inside every NAS box. And then if you wanted to free up that, you simply wrote to Seagate, they would give you the code, you would pay so much a month, and you would have everything online. And for the first month, they bring in a high-speed scanner, and they'd run that high-speed scanner for you for a month to get all your records digitized, and then from then on, you just digitize as you normally would. So that's what they did. It worked very well. It meant that our project leaders, IP owners, were able to exit to buy a trade sale to Seagate, and they knew that Fortune 500, they would pretty much be able to guarantee that they could trade their shares in Seagate because they didn't want cash, they wanted equity in Seagate. So it was a script for script rollover, reduce their tax, because all they're doing is swapping shares in one company to shares in another company. Boom, there it is, all done. If they started selling shares, they were realizing profits and then capital gains on top of that. But they didn't necessarily need to do that. So that gives you an idea of how powerful technical advisory panels can work for you. I've had a guy, technical advisory panel, who ultimately became the cornerstone investor on the project, primarily because he wanted to be on the board with somebody famous who was in the project. He was famous in his country for being in funding and finance, and this guy wanted to be on the board alongside him so he could show he was an accountant, and he was also a business migration agent, and he wanted to show his clients how he mixed in the right circles. So he paid, I think he paid $1.1 million for the right to get in there for his seat on the board and shares or equity in that project at cornerstone investor level. And he came onto the technical advisory panel. He couldn't offer too much, but he wanted to be on that. He made that absolutely a condition of it. I've also had people go onto technical advisory panels from universities, not for reward, but because they want their name on a technical advisory panel, so it looks good on their CV, and they're also building their contacts within the industry. So don't underestimate just how powerful that is, and the fact that it's not about money at all. Okay, so today I promised you I'd teach you 3 things: how scaling a business can exponentially increase the trade sale value for you, what resources venture capitalists, and by venture capitalists I'm also talking about private equity funds and large scale individual donors who come in and sponsor businesses, what they can bring, which is far more than money, and finally what you should have, why you should have a technical advisory panel once you get forward and you start scaling your business. And I hope I was able to give you all of that today. Now, where to from here? You have options. Obviously, if you want to learn a little bit more about our 6 steps, we've got something for you. We have a full 2-day workshop. We haven't run those for a year now because of COVID, and we're looking at probably the last half of this year in Sydney, Melbourne, and probably Singapore, and 2 in the US. That'll be from about September, October. You can book in for that. I do have one group who are looking at taking on this in their own right. They're going to bring 20 people, and we'll run that in a resort for them only, and it's exclusive for them. If you have 20 inventors in a group, then maybe that's what we can do for you. And we're actually running that in July, so we're proposing to run it in July, so that gives you another option there. The 100 Days Challenge, which is a funding program. If you've never been able to crack the funding code, I'll show you how to do it. I'll bring you a 14-week program, which at the end of it will pretty much guarantee you'll get money if you followed us along, and if you don't, I'll raise you the money. That's the guarantee you get at the end of it. So, but you have to follow my program, and if you do, I'll guarantee you. And more importantly than that, at the end of 100 days, yes, you funded one project, but you've got a skill you've got for life. What you can do with that skill afterwards is repeat it in just 2 weeks. It doesn't take 100 days to do it the next time. It takes 14 days. And we've proven that time and time again. And our hit rate on that has gone from how we used to do hunting and begging, which took us about 56% we ran at, and that took it to greater than 95%. So it is a huge difference in the way we do raise our capital. Also, you can book a commercial modeling project if you understand how the commercial model plays a very big role all the way through the 6 steps. And it's step number 1. And if you haven't got that right, then chances are it's going to come back and bump you all the way through, and you're going to get less money for your project. You're going to get take more risk, and the time interval to commercialization is going to go from months to years. And if you want to convert that back from years to months, you need to talk about commercial modeling, and we do sessions on that, which are half-day workshops using Zoom, and so you don't have to be sitting next to me to do it. But we start with 244 questions, and we blow it out to about 400 different decisions that you're making in a decision tree on that day. So it's quite a heavy operation, but the rewards are huge. Okay, so next week we're going to handle the exit. So for those of you who want to learn how to get out of a project, I've given you 2 things. One, the best time to plan an exit is at the beginning of your project. The second best time is right now, wherever you are on your project. Stop, go and plan your exit. Plan it for you, plan it for the cornerstone investor, plan it for every other investor. When you scale a project, that person, the venture capital firm or private equity firm, will bring their own exit into the program. They will not play with a project that doesn't have a clear exit for them. Okay, so there we are. Now we'll, for those of you who have any questions, here's how you can get hold of me or learn more about those programs. If you have your phone with you, just take a photo of the screen there. A little bit easier later on, you can just type it into your browsers. So if you want to grab that, you also have access to my book. Here it is, $1 Billion Napkin. For those of you, that's on the screen. You can see the paperback version. I've got a hardcover version. And yes, if you buy it from Amazon, you'll get it in a couple of weeks. If you buy it from me, you get it quicker, and you can ask me to endorse it for you. So it's up to you. All right, so there we are. That's today. Now I'm going to flick back to our thing, and we're just going to set the questions going. Now, I'm going to try and get you, if you want, you can raise your hand to ask questions, or you can type into the chat. So for those of you who would like to, anybody, any questions based on what we talked about today, or any other questions that it's raised as a result of what we discussed today? Nothing. Everybody's very quiet today. So let me see. Well, nobody's asking. Good morning. Yes, good morning to you, Satish. What is your question today? Yep. Do you have a question? Hang on. I'll allow you to talk, Satish. How's that? You can unmute your microphone and talk to me if you like. There we are. Hello, how are you?
Hello. Yeah, good morning. Good morning, Daniel.
Good morning. What can I help you with today?
Yeah, sorry, actually, I joined today a bit late, around 15-17 minutes, but would like to know what you shared today, if it's available for review,
Yes.
it would be great, so
Yeah.
that I can go through before I
Okay.
really start next time.
Okay. Well, I'll just type in there. You've got 6easysteps.com, and you'll get a recording. If you wait an hour or so, you'll have a recording of today's session.
Are you typing in the chat?
Yes, I am. I'm just giving you 6easysteps.com.
Okay.
Now, you also have it on the previous page for those of you who took a snapshot of that. 6easysteps.com has recordings of each week. We do 7 recordings on this program. The 7th one coming up week after next is actually done on the Saturday morning, not on the Thursday morning that we normally do here in Australia. So it's Friday night in the US. And in a case like that, it's a full 3 hours. So we actually run the whole series all at once for those of you who want to, who have endurance. So you can revisit that if you like, but there's less Q&A. Most people are worn out by 3 hours and don't ask too many questions. Okay, so you now know where to go. Okay, so
I couldn't see you typed anything here in the chat.
Okay, what you'll need to do is go down to the bottom of your screen. You've got chat. Click on the chat. Yep.
Right.
And then
Okay.
6easysteps.com.
Is it a spell or number?
No, the spell. 6 Easy Steps.
Okay.
Look, hang on, Satish. I'll share my screen again. There it is. There. Where is it? There, right here.
Oh, okay. Got it. Thank you.
Okay, no problem.
Yeah.
Okay.
Sure. Yeah.
Okay. Thank you. Now, anybody else with questions? Yeah. So, okay. Okay. So, I'll now just drop you back to now. Anybody else with questions now? Thanks for people who like the presentation. That's good. Unfortunately, it's all these sort of presentations are usually very, very boring, very dry, and our subject matter is probably a little bit more exciting than the average accountant's or solicitor's one. So here's hoping. Anybody have anything they want to ask me? You can put your hand up and I'll unmute your mic. You can talk to us. Anybody? Okay. No, I can't see any other questions. Nothing else? No other questions? Well, this is probably early for us. Just 1 or 2 questions, nothing else. So based on that, if you want to get to the recording, you have it. What I would provide for you now is I'll jump back to share my screen. And anybody who wants to then get their phone camera out, you can take a photo of that. And I'm more than happy to for you to contact me on any of those. So it just means dragging and dropping, but you can key it into your browser and off you go. That today's session won't be uploaded for about an hour or so, but after that you'll be able to come straight in and talk about this one. Okay, thank you very much, everybody. That's me for today. I'm now going to finish it, and we'll see you next week, which is for planning the exit. Thank you.